breaking down economic news for traders. Hi, it's Charlie giving you today's video. I hope you're very well. So economic news releases, we get them all of the time. We've literally just in this past week had FOMC. The previous week we had non-farm payrolls, or the week or so before that, 2 weeks ago. So let's break down some of the elements that go on when you get an economic news event, because a lot of traders get confused. They get confused when you get a headline piece of news and then the market then goes and does something else. So we're going to pick 3 recent news events. So we'll take non-farm payrolls day. I think it's that day there. We've literally just had Fed day, just literally this past week, FOMC, and we'll see if we can pick another one out of there as well. So let's now go over to non-farm payrolls first of all. So that's this reversal bar here. So what was the actual news like on that day? Well, if we come over to Forex Factory here, then it's not going to show it, is it? We can't quite see it. So we had the average hourly earnings within the non-farm non-farm payrolls on the 6th. What we're looking at are 3 component parts. So we're looking at the headline non-farm. This is the big number. This is the number that gets the initial reaction in the markets. So was it a beat or a miss? It was actually a beat. The forecast was for about 160,000 jobs created. It was 142,000. So as far as the currencies are concerned, at that point, if I come back over to the chart of the euro dollar, what's that, the 6th? The euro dollar may have gone up on that. Let's go and have a look on the 6th. Let's see if we can scroll back. No, actually, let's just use the go to function and go to the 6th. Okay. We're on an hourly chart. There we go. Where's the 6th? Monday the 5th. There it is. Just trying to find the 6th here. Where are you? There we are. What's going on? Oh, here we go. Right. So this is... no, that can't be right. That's Tuesday. Found it. There we go. I was on the wrong date. So the 6th of September. So what you can see, when the news broke, the euro obviously had a jump up against the dollar. So the initial reaction was to the upside, but you can see that subsequently, the dollar came back and the euro sold off against the dollar. So using the euro dollar as the proxy here, so you would say, well, why did the non-farm payrolls didn't come out as strong? And yet, so why did the euro not go higher? Well, it did, but then you've got to take into consideration average hourly earnings. So these came out, and they came out slightly stronger here. So you've got a mixed report. Plus, you've got the unemployment rate down here as well, which came out in line with forecasts. So you've got a mixed report there. So the key with a lot of news announcements is the potential for, go back to the daily chart here, for sub-reports within a report. So you get your headline report, like the jobs numbers there, but you've then got to look at the sub-reports within it, which can swing a market back the other way. Let's take Fed Day from literally this past week. So it was FOMC, and the Fed cut interest rates by 0.5%, didn't they? So the market was expecting 0.25%. That was the as far as the forecasts were concerned, 0.25%. Right. So going into it, there was a lot of anticipation as to whether we were going to get a quarter or a half, but they went a half. So again, the euro on the day jumped to the upside. And all the other currencies did against the dollar as well. And yet by the end of the day, they've all come back off. Why is that? Well, again, you've got to read into it, which isn't easy in real time, but especially on an event like that, because Powell's got his press conference and he's going to be talking and the market is listening out for every word that he's delivering. But essentially what happened was you've got the buoyancy, the market's being buoyed by 0.5% rate cut, but then the market then starts getting a bit cautious because it starts worrying that, oh, okay, as we've done 0.5%, maybe we're only gonna have a not, overall the forecasts from the other Fed members, which is what we call the dot plot. The forecast within the dot plot actually taking us through to end of next year sees the Fed at 3.4%. Okay, so which is down a little bit from where it was previously. So the market had already been pricing that in. So as to where it felt that the Fed was going to go, somewhere between 3 to 3.5%. So all of a sudden, there's not much more to be cheered about in that very short term. So prices just soften off. So what's my point here? When it comes to news, you got to be careful, because you can get a headline news event come out and the market can then go and swing the other way. Sometimes it's because there's component parts within a report, like I said about non-farm payrolls. Other times it might be something like Powell said within his press conference, well, we could cut next time, but if the data doesn't warrant it, then we might not. And so then again, the dollar can come back. So if you're going to be trying to trade around news, you've got to be really into, in our community we do this a lot, you've got to be into, well, what's the report coming out? What's the level of expectation from the market going into that report? What's the sentiment going into it? And are there any sub-component parts of that report? So you might get a headline number, like I just went through there with the non-farm payrolls, but there were other component parts which tempered the initial enthusiasm there and just brought price back. What's really important though, now for intraday traders, short-term traders, this is really important stuff. For swing traders, is it? Because let's go and have a look here. Non-farm payrolls, we sold off a little bit more, and then before we know it, we're coming back up, and a week or so later, we're back up above the highs of non-farm payrolls day. So my point is, the fundamentals, the economic news reports are fascinating. I find them interesting and we cover it off a lot. But if you're trading in a given direction, on a swing basis especially, just stick with your plan. And that would be my final piece of advice. Just stick with your plan on that note, because all of that noise is going to happen. You've got to try and filter out that noise, because every time, so let's say you were long euro, every time there's a pullback in price, whether it's here or through this period here, there's always going to be negative news which accompanies a pullback. Of course, there has to be in order to create a pullback. So as a trader, if you're trading on the long side here, you've got to sort of filter that out and say, well, that's just noise at the moment in the short term. I can't get myself caught up in too much of that. It's entertaining, yes, but what's my big picture if you're long? Or if you're short, well, what's my big picture for the short side? Right, okay. And the news is interesting. It does help drive the market in the short term, but a lot of the time, if a market wants to go up, and on that particular day it retraces, it will find a way to go up further along, much like what we saw certainly post that. So in the very short term, it affected price, and then the price then shrugged it off. There we go. That's all I have to say about that for today. Have a lovely weekend.